What's up, guys? Welcome back to DCA. So in this video, we're going to be taking a look at a metric which has the potential to show us peak seller exhaustion, where that level may be in relation to where we're at right now, and how this can be used to gauge when the market may be ready for a turnaround. So we're going to look at instances in the market when the market's reached a point where it's so depressed, the price action has been so poor that we've essentially reached a critical level where we've exhausted all of the sellers in the market, essentially reaching a point of maximum capitulation. And so we're going to look at where that has been in prior cycles and try and use those historic examples to understand where we may be at now based on those frames of reference. Now, we have to keep in mind, though, that no two cycles are going to be the same. And in particular, with this cycle, we're facing a new set of market circumstances. So the cryptocurrency market has never, quite frankly, faced a broader market recession. So when we're discussing this today, we need to keep in mind the greater context of the general market and how ultimately that's going to impact our analysis today. So with that said, guys, if you guys like this type of content, remember to hit like and subscribe. You could also head over to the Discord channel where we do a lot of discussion of the broader cryptocurrency market and the macroeconomic picture. You can also sign up for the DCA Index Risk Model. This is a machine learning algorithm model that I've developed, which helps you to identify where both market cycle peaks and market cycle bottoms occur. So this metric is a free trading view indicator, which we've developed for Bitcoin, Ethereum, and most of the top altcoins. So the metric is available to sign up for on the Discord channel. I'll leave a link to that in the description below. And with that said, guys, let's dive into the market and see where we're at now. Okay, guys, so this is this metric we're going to look at today. This is showing us in this aqua color here, the number of wallets sitting in profit. And in the more pink color, we have the wallets sitting at a loss. And the first thing that will jump out to you is the vast majority of the time on the Bitcoin network, most of the wallets are sitting in profit. All right. And we're going all the way back to 2012 here. But we see that almost 90% of the time or more, the ratio of wallets sitting in profit versus the ratio of wallets sitting at a loss is heavily skewed in favor of the wallets sitting at profit. Now, interestingly, we can see, though, that there are several periods in time when the wallets sitting on a loss has exceeded the number of wallets sitting in a profit. And so these times are very important to study for Bitcoin. And it's interesting, especially because we can relate it to where we're at right now. So as we came to the second week of July, notice that as the price dropped from around 26K all the way down as we closed at around 20K, 20.2K, the number of wallets sitting at a loss exceeded the wallets sitting at a profit. Okay. So that's the first thing to take note of here. Okay. And well, the first thing we can ask ourselves is, what is the reason that the majority of the time most wallets are sitting in profit? And this is simply for the fact that if we go back historically and think about the number of wallets who own Bitcoin at each price, we know that there are simply a huge number of wallets, millions and millions of coins that are sitting back here in this 2010, 2011, 2012, all the way through 2015, 2016, 2017. There's a huge number of wallets who own Bitcoin back during this time period. And so there's millions and millions of coins owned at times prior to 2017, prior to this bull run that peaked out here in December of 2017. Because of that fact, because of those wallets holding Bitcoin, we're going to naturally see that even if we're in a bear market, the majority of wallets are going to be sitting in a profit. Okay. And what we need to then do is take a look at these time periods where Bitcoin has actually fallen to the point where the majority of wallets on the network are sitting at a loss, because these are critical times where a transition shift in the market occurs. And so that's what we're going to do today. We're going to take a look at that. All right. And so we'll just go back and we'll start by looking here back in 2015. So if we recall back at that time, the Bitcoin price had dropped a huge amount, right? We had went from a peak of around $1,200, and in a fairly short order, we had dropped all the way down to right here at around 150. So we had around an 87% loss. And you'll notice that even before that point where we went from right here at around $350 all the way down to 150, we actually had reached a point on the network where the majority of wallets were sitting at a loss. So where did we get to that point at? And it was right here at around 72% down. And that's an interesting point because that's very similar to where we just were recently, prior to our recent price run. Now we've actually come back down very close to that level at the moment. So what we've seen is that, during these points, during the point where the market is crashing down, these tend to be the times where a lot of people buy in at the top and then they're, attempting to buy the dip as we're coming down from 1200, all the way down to this peak at, or, this bottom here at 400 or so. And people are trying to buy into the network during that time. Right. And it's right here. It's at these points that we've seen, like here, where the market becomes net negative. These were times when, during these volatile periods where the price has crashed and, we're down 70%, we're down 80%. These are the times when even a lot of your longer term holders at this point come to a point where they're sitting at a loss. So basically, the number of wallets sitting at a loss continued to rise throughout the remainder of the bear market, essentially. And you have to remember that this is even in spite of the fact that if we just measure this move here, these were no small moves. So from bottom to top, that was around a 100% move. And even from these closes, these were 40% moves here. So these were rather large moves to the upside. And in spite of that, we were still seeing that the majority of the wallets during most of this time here were at a loss. And how long did this last? And I think that's going to be relevant. And I think it's going to be particularly relevant because we want to know contextually, historically, what have we seen in terms of the length at which we could be sitting on a net negative? And in this cycle, we were actually sitting on this for almost a year, plus or minus a year. We were at a point where the majority of wallets were sitting on a loss in the entire Bitcoin network for about a year. So that's the 2014 into the 2015 bear market. So we actually have another instance right here. And when did this occur? We got to that point right here as the price was coming down from around $6,000. You can see even before the crash, we were approaching this point right here, right? So these two values were not far off of one another. But as we've seen with Bitcoin, it's pretty much going to do what it wants. And when it's in a downtrend, it's going to typically stay in a downtrend for quite some time. And what we saw was that, this continued, this bear market continued until we started this next uptrend. That was around 469 days. And let's take a look at how long this point lasted then, right? And this only lasted about 2 or 3 months. Okay, so when we compare it to this prior stage in 2014 into 2015, we saw that that lasted around 390 days. All right. So that's going to bring us to this point right here, the COVID capitulation event. We all know that it was a massive crash for Bitcoin where we went from right here at around 10K all the way down to around 3,900, 4,000, a price which people did not think was going to happen again. And what you saw was that for a very short amount of time, yet again, this acted as a catalyst to sort of turn the price around. So what we're getting at is these times, they tend to not last very long. And when they do happen, the ratio between the number of wallets at a loss versus the wallets at a profit during the times when we do become net negative, it's very close to one another, right? And so we saw right here, again, right here, and again, in each instance, they're very close to one another. And so that brings us to right now. Right now, we got to a point right here where it was about 50-50. So let's come over and look at this in this way then. All right, so what we're looking at here is the number of wallets sitting in a profit. During these times that are at this peak level, so this level of 1 right here, these are times when 100% of the wallets are sitting at a profit. And we can see that these are times in general when we are at or approaching a new all-time high. And so it makes sense, right? If you're at a new all-time high, it's going to be very difficult for wallets to be sitting at a loss, right? Some people will find a way to do it, but it's very difficult to be at a loss for very long as we're going into these parabolic phases of the cycle. So what we see is that during these times when we're all the way up here, these are going to be bull markets. And these are the setup periods that we constantly see where people kind of buy into the market, new participants in the market, they come in. Now let's take a look at what the trend has been. When we come down to this dashed line here, this is a 50% point where 50% of the wallets are sitting at a profit, 50% are at a loss. And so I want to just show you an interesting trend that we've seen in the wallets sitting at a loss versus the wallets sitting at a profit. And then we're going to look at where these points occurred. So if we just took a look at a line here, right, and we'll just go from here to here, and we just kind of take a look at this point where we reach this level of essentially maximum capitulation, because people who are in the network, they've sort of sold out, and we're reaching a point where most of the wallets are actually sitting at a loss, right? So we have only several points in Bitcoin's history where this has actually happened. So it started right here until about right there in the end of 2014 into August of 2015. Then we saw it again here in November of 2018, like we said, until February 2019. And the COVID capitulation event, right? And then yet again, it happened right here in June of 2022. So the second week of June, we've come down and we nearly surpassed that point where the number of wallets sitting at a loss was greater than the wallets sitting in profit. And so the importance of this is, well, there's kind of two things. Notice that this trend has been constantly increasing. And that's for large part, like we said, the fact that a lot of these older hands, a lot of these people who have been holding for a decade, 8 years, 5 years, 7 years, that is constantly growing, right? Because now that it's 2022, the people who've been holding back since 2019, they're all massively in profit, etc. So 2018. And so we're just accruing people that are sitting at profit over time. And these points then, where we're coming down to this trend line, have historically represented areas where we've sort of pushed out all of the people who have recently entered the network. So in the case of this cycle, we're talking about people who came in here during this time when essentially everyone was sitting at a profit. So, we're looking at basically the period from October of 2020 through April of 2021, and then yet again here in November, as well as the people that sort of had the buy the dip mentality. So buying dips in May, in June, and July, and then yet again here in February, basically all the way through April, April and May. All of those people are now sitting at a loss. And so what we see is that when we get to these points, there essentially aren't many sellers left in the market, because you have to imagine that if, where we're sitting at now at 21K, if you kind of haven't sold at this point, it's very likely that you're not going to be someone who sells, right? And that's at least what we've seen historically. It's why we've seen this upward trend line where those people in the network have sort of sold out, or anyone who's going to sell has kind of sold out at this point, and those people are now sitting at a loss. So the only people that could sort of move into a loss right now are people that own Bitcoin below 20K. And we know that all the way down to 13K, there really aren't a lot of holders there, all the way down to 13K. So even if we did start moving down to, 18K, 17K, 16K, that kind of wouldn't change this analysis, as we've shown many times on the channel, where below that 17K level, there's just not a lot of support. There's no more than about 1 million coins or so, right? So a very small percentage of the network. And so that kind of demonstrates to us that, there's still downside risk where we're sitting at. But in terms of the people who have kind of capitulated right now, it seems like we have reached a point where, a lot of the people who are going to be pushed out have been pushed out. It's not to say that we've reached the bottom. Definitely not to say that, because, what we just said, there's room to move down from here and to keep this statistic very stable in relation to where it's been in the past, kind of right at this 50% sitting in profit, 50% sitting in loss. So this upward trend line could remain in place and could remain valid even with a larger move to the downside. But with the broader picture in mind, if you don't believe that anything has necessarily invalidated Bitcoin, which I don't myself, I don't believe that anything has from this cycle has kind of invalidated the broader, longer term purpose of Bitcoin. In fact, I think a lot of the things going on in the macro market right now have sort of put us in a place where it's strengthened the idea of Bitcoin. And so if you hold that belief, then I think there's a lot of supporting evidence to suggest that, you know, we have kind of pushed out all the people in the market who are going to sell. And from here, it's a consolidation phase. And that's the kind of thing that we've seen in the past where it's led to Bitcoin sort of stabilizing at one of these prices like we're at now, like 20K, and then ultimately leading us into the next cycle where it's sort of a rinse and repeat type deal where we go from these extremely depressed periods into times when the vast majority of people on the network are going to be holding at a profit. And so essentially we're saying that this is now an opportunity for long-term minded investors to enter into an asset at an extensively discounted price. So that's going to be it for this one, guys. If you guys like this type of content, hit like and subscribe. And until next time, as usual, see you.